that asset. If you're looking for the useful life of your money in an asset, then the way to figure it out is ask, how much does it cost every year to maintain that asset in pristine condition? What do I have to spend in order to avoid depreciation or decay? It turns out that that useful life, is very close to something we know in the Bitcoin community as stock to flow. They're very related if you're measuring them in years. Many individuals and most corporations, they use financial assets to preserve capital. And this is the source of a challenge for us. Let's talk about financial assets. I want to keep my money for a long period of time. Start with $1 billion, put it in the peso, and the money is decaying in 2 years, right? A 98% inflation rate strips you of your economic energy or your capital. This is not a good long-duration asset. The Turkish lira, your capital lasts 3 years. The US dollar, under traditional monetary inflation for the past century, might last 14 years, but it's not like you have it for 14 years. The life is being sucked out of you linearly over the 14 years. Put your money in a hedge fund. What's the annual cost? It's 2% management fee and then 20% of the upside. About 4% a year if you're investing in normal assets. That means it's a 25-year asset. Treasuries, you're going to get a yield, but the 3.5% after-tax yield goes against the 7% monetary inflation. Maybe your money lasts 30 years. Capital in a mutual fund where you pay a 1% fee, 100 years. That's about the best you're going to get. If you manage to buy a diversified portfolio at 10 basis points, the counterparty risk is going to drive you to a 1% cost. So those are your financial assets. We're running the world on a 20th century set of ideas, and on average, a financial asset is going to last you 30 years. We all know inflation dilutes the value of financial assets. But inflation is just the tip of the iceberg. You're also going to get diluted by tariffs and tolls and torts and transfers, taxes. We got all sorts of taxes, income tax, capital gains tax. Every time you vibrate and move the money, you get taxed on the money. And then if the taxes don't take you and the torts don't undo you, you've got weather and competition and obsolescence and politics, catastrophe. Those are the things that dilute the value of your capital over time. And if you want to maintain economic energy, you have to fight against that friction. Well, most people realize that's a frustrating endeavor and it's a no-win endeavor. So they give up on financial assets and they start turning to physical assets to preserve capital. Well, here's a physical asset, a Ferrari. Not a good way to keep your money forever, though, because after 5 years, you've spent as much on the insurance and the upkeep and the depreciation as it's worth. Yachts aren't much better. If you spend 10% of your money operating it, you also get hit with depreciation. Don't store your money in yachts. A home in Miami Beach, if you buy a $10 million house, you better come up with $10 million to maintain the house over 17 years. Now you've got no money left. Silver, 22 years. A warehouse, 40 years, maybe 50 years. Bar of gold, 62 years. A painting, 72 years. Land, the average property tax in the United States is 1.1%. That means your money is going to last 91 years. Unless the government reassesses the value of your property, then it's going to last less than 91 years. The oldest family ranch in the United States is King Ranch. They made it 173 years. Every other family in the country failed. And here's the longest held property, the Crown Estate in the United Kingdom. You could say the royal family held it since 1066, but on the other hand, it passed from the Plantagenets to the Stuarts, through the Lancasters and the Yorks, and eventually found its way to the Hanover family. And so maybe 7 different families split that. None of them got to take it with them. So physical assets you might think might last 1,000 years. Probably about 50 to 75 years is the best you're going to do. Entropy is diluting the value of your physical assets. It's sucking the capital, the energy out of them. There's a reason it's called Earth and not heaven. Because politicians are very creative. They got a city tax, a county tax, a state tax, a federal tax, a transfer tax, a usage tax on the property. And if that doesn't get you, there's rent control, price control, or a culture shock. Then you got competition. You might get discriminated against. There's recession. The currency can collapse. Your tenants won't pay you. Someone will slip and fall on the front sidewalk and sue you. There's weather, war, crime, and catastrophe. And if energy prices go through the roof, it's going to be hard for you to make go with it. Physical capital is not a simple solution. Something I learned at MIT. The 3 laws of thermodynamics. You can't win. You can't break even. But you can't get out of the game. So you could stop right here and be a little bit depressed. But then again, you don't lose. So you start thinking, what if we could find a way out of the game? Then we could break even. Then you could win. So she found a way. He gave it away. And he went. And it's Bitcoin. Bitcoin is digital capital. That's what he created. Bitcoin's immoral, immutable, immaterial capital. And I use that in this sense. It's got an infinite lifespan. It's not being taxed by the forces of weather and entropy and inflation. It's immaterial in the sense that it's not in the physical world. It's not suffering from all of those parade of horribles that are the scourge of financial and physical assets. And it is a solution to our economic dilemma. The transformation of capital from financial and physical assets to digital assets, it solves the problem that we're all facing. Now, how long-lived is Bitcoin? Well, take Bitcoin and put it at scale with a custodian, an institutional-grade custodian. You pay 10 basis points. You know, by the first law of money, that means you're going to last 1,000 years. The custodian might not last 1,000 years, but that doesn't matter because you can move Bitcoin every year or every decade, and you can stay one step ahead of the custodian's failing. You can't teleport a building. You can't teleport King Ranch. You know? And so Bitcoin is that thing you move. Say you custody your Bitcoin. You can self-custody your Bitcoin for about 1 basis point a year, assuming you buy good wallets, signing devices, and data. Keep track of it. Now you got a 1,000-year asset. What happens if you give it to the AI? Well, an AI or a computer program can maintain those private keys for the cost of electricity. You've got a 100,000-year asset. The AIs are going to want Bitcoin. If they have a choice between owning the Bitcoin and owning the rand in Texas or owning our gold or owning the Argentine peso, it's pretty obvious why they're going to want. You can see here why they're going to want it. Digital assets are a class all their own. When you compare them to all the other assets that you can use for capital preservation, you can see they're off the scale. Everything else is living in the domain of 30, 40, 50 years, and you're in the domain of down to 100,000 years. It's a breakthrough in capital preservation. It's a revolution in economics. If you would be rich, trade wisely. And here's a very simple principle. Trade temporary for permanent. Trade your ice cream cone that's melting for the peso for the dollar for the land, and the land for the Bitcoin. Trade the currency for capital. Trade something fragile, something resilient. Trade something local for something global. Trade something physical, something digital. Trade the security for the commodity. Trade commodity, the scarcity. You can't go wrong moving in that direction. Let's talk about some great trades in history, some trillion-dollar trades. The Dutch understood naval power. They understood ships. They had thousands of them. They bought the best port in the New World for a couple $100 in plastic and textile trinkets. And that's worth $2.5 trillion today. Okay? It was an investment that's returned 6% for 390 years straight. It's a 10.5 billion X return. Think about it. Why would I actually give up the best port in America for a bunch of textiles and plastic and glass? But the people that sold things to them didn't understand naval power. If you don't appreciate the reason you're going to want the property, you won't value the property. Napoleon wanted to gallivant across the old world, and Jefferson wanted to expand the new world. So France sold Louisiana to the U.S. for $15 million in 1803. The $15 million probably lasted a few months fueling the French army. It's gone. Jefferson got that. He got 27% of the United States. It's 800,000x return. Or 12 trillion or more. It'll be worth more. Justin has some vision. As did this man. Stewart paid $7 million for Alaska 2 years after the country's decimated by the Civil War. John D. Rockefeller started an oil company. Today, there's $1 trillion of oil underneath Alaska. It's a massive return for a piece of paper. How much is digital capital worth? $450 trillion multiplied by 3%. That's your entropy cost or your inflation cost. It costs the world $13.5 billion a year to take all of those parables, and they're trying to preserve the wealth. If you put a 20 PE on it, like value a company or a long-duration bond, that's worth $270 trillion. So digital capital is worth 10, 20, 15 trillion a year, and it's worth hundreds of trillions of dollars. Reality check. Is he full of BS? Well, digital capital is returning 55% for the past 4 years. Financial capital, the best in the world, is the bonds, minus 5%. Imagine capitalizing your company or your country on minus 5% instead of plus 55%. It's obviously working. And now let's come back to my chart here. Global wealth, we can look at it like this, and we see the little Bitcoin, square in the left corner. But what's happening? Here's my macro Bitcoin forecast. It's 21 years. Goes out to year 2045. What do I think will happen? Well, I've got a bear case and a bull case, but what I think will happen is that 55% ARR goes to 50%, 45, 40, 35, 30, 25, 20. It's between 50 and 20. It'll gradually decelerate till it's growing about twice as fast as the S&P index. And at that rate, Bitcoin's $13 million a coin in 2045.